What if I told you the crypto market, after weeks of relentless fear and doubt, is about to unleash a violent recovery so powerful it could catch 99% of investors completely off guard? You might think, no way, not after what we've seen. You might even be thinking of clicking away, convinced it's just more hopium. But what if the very signals you're overlooking, signals hidden in plain sight, dismissed by the mainstream, are about to unlock a financial transformation in your portfolio that most people only dream of? This isn't about gut feelings. This isn't about meme coins. This is about undeniable, fundamental shifts, backed by market dynamics and a cascade of institutional triggers that are now converging. If you're tired of the choppy waters and want to understand how to ride the coming tsunami, keep watching. Before we dive in, if you're serious about navigating this market, hit that like button right now. Subscribe to the channel so you don't miss our next crucial update, and type interested in the comments below. I'll personally heart every single one of your comments. This engagement helps us reach more people who need this vital information. In this video, we're going to connect the dots on exactly what will trigger this violent crypto recovery. We'll peel back the layers from the critical moves on the S&P 500 to Bitcoin's make-or-break levels, and show you precisely how this domino effect will unleash massive, disproportionate gains for XRP, HBAR, SUI, and XLM. We're going to look at the cold, hard data, the volumes, the liquidations, and the critical technical levels that once breached, will unleash a surge that will leave many scratching their heads. This isn't just a bounce, it's a structural shift that could reset your entire financial future. But to truly understand it, we need to address a hidden weakness that's currently holding us back. Right now, the market is showing signs of life. We've seen some nice green candles on XRP, HBAR, SUI, and XLM in the last 24 hours. Even Bitcoin is seeing a modest bounce. But here's the crucial question. Is this just a dead cat bounce, a momentary sigh of relief before another drop? Or is something far more significant brewing beneath the surface, something that's still being resisted by an unseen force? What if the key to unlocking this massive recovery isn't just within crypto itself, but lies with external markets that 99% of crypto investors ignore? And what if the very weakness we're seeing on Bitcoin and Ethereum dominance right now is actually the strongest signal for an altcoin explosion? I'm going to show you exactly what to look for, but first, let's analyze the critical external factor that's holding the crypto market hostage. Let's get real. While we all love to focus on Bitcoin, the undeniable truth is that the crypto market, especially altcoins, is still heavily influenced by traditional markets, particularly the S&P 500. Think of the S&P as the lead domino. When it moves, crypto often follows. Right now, the S&P 500 is sitting directly on a critical demand zone. We've been talking about this for weeks in our private community. This is a level where buyers historically step in with force. We saw a nice bounce on Friday's candle, indicating this demand zone is holding strong. While stock futures might look subdued this Monday morning, don't be fooled. The setup for a violent recovery in the S&P is there, and when it happens, it will send a ripple effect directly into Bitcoin, and then into your favorite altcoins like XRP, HBAR, SUI, and XLM. But here's the kicker, it might not be immediate. Remember early July? We saw a boring Monday and Tuesday, then the recovery truly kicked in a week later. Could this week be a chop fest before next week's explosive move? Or will the market surprise us with an immediate surge? The answer to that lies in Bitcoin's next critical move. While the S&P sets the stage, Bitcoin is the conductor of the crypto orchestra. And right now, all eyes are on one critical level, $117,000. This isn't just a random number. This was major support throughout July, a fortress that held until July 31st, when we finally lost it, leading to that dip to $112,000. My core thesis? The second Bitcoin gets a daily close above $117,000, we're going to see a violent recovery kick off. Why? Because regaining this level means reclaiming major support and triggering a cascade of short liquidations. Think of it like an army breaking through a heavily fortified enemy line. Once it falls, the path ahead becomes much clearer, and momentum builds exponentially. We're talking about a potential 25% run-up on Bitcoin to $130,000, possibly even $140,000, by late August. But even with Bitcoin soaring, for XRP, HBAR, SUI, and XLM to truly explode, something else needs to happen within the crypto ecosystem itself. Something that few are tracking. This is where it gets exciting for altcoin holders. While Bitcoin's move to $117,000 and beyond is crucial, for a true altcoin season, we need to see Bitcoin dominance and Ethereum dominance start to weaken significantly. Think of it like water. As the Bitcoin and Ethereum reservoirs get weaker, the overflow spills into altcoins, pushing their prices up. Right now, we're seeing subtle signs of weakness on the 3-week chart for both BTC and ETH dominance. We want to see those major red candles, signaling capital rotating out of the majors and into the smaller, higher potential projects. Simultaneously, the liquidation heat maps for both Bitcoin and Ethereum show significant leverage concentrated around key resistance levels. When Bitcoin pushes past $115,000 towards $117,000 and beyond, those leveraged shorts get liquidated, adding fuel to the fire, causing prices to surge even faster. The same applies to Ethereum once it reclaims $3,620, potentially pushing past $4,000. When these two giants ignite, it creates the perfect environment for XRP, HBAR, SUI, and XLM to not just follow, but to lead the charge. But each of these altcoins has its own critical hurdle. It's one thing for the market to move, but for your specific bags, your XRP, your XLM, your SUI, your HBAR, to truly experience that violent recovery, they each have their own battle lines to breach. Think of them as individual gates on a racetrack. Once opened, they accelerate into the lead. For XRP, we're watching $3.13 like a hawk. Reclaiming this means flipping a stubborn resistance into solid support, a major bullish structural shift. For XLM, the target is 42.5 cents. Breaking this sets it on a path to a higher high, signaling strong momentum. SUI needs to flip $3.71, a level that has held it back since May. And for HBAR, the critical level is 25.5 cents. Look at your charts, this was a springboard for previous surges. But what happens if these levels are breached? What kind of explosion are we truly talking about for these individual assets? And how does their underlying utility supercharge this recovery even further? The answer lies in their unique positions in the coming financial revolution. This isn't just about price action, it's about utility. The reason XRP, XLM, SUI, and HBAR are uniquely positioned for a violent recovery is their fundamental use cases. XRP is built for speed and efficiency in cross-border payments, with Ripple's on-demand liquidity, ODL, gaining traction globally. It solves a real-world problem for financial institutions. XLM, Stellar Lumens, is a strong contender for central bank digital currencies, CBDCs, and remittances, partnering with major players like MoneyGram. SUI is the dark horse, a Layer 1 blockchain built for Web3, gaming, and high-throughput dApps. It's targeting a massive consumer market that demands speed and low costs. And then there's HBAR, Hedera Hashgraph, the enterprise-grade DLT, distributed ledger technology, with its unique hashgraph consensus, poised for massive real-world asset, RWA, tokenization, and institutional adoption. These aren't just speculative coins. They solve real problems and are attracting real users and real institutions. This inherent utility provides a fundamental bedrock for their recovery, making any bounce far more sustainable. But there's a larger, almost invisible force at play that's about to accelerate everything. Beyond the charts and individual crypto projects, lies the undeniable force of global macroeconomics. The market has been gripped by fears of inflation and rising interest rates. But the tide is turning. We're seeing signs that inflation is cooling, and the Federal Reserve is nearing the end of its tightening cycle. What happens when money gets cheaper to borrow? What happens when traditional investments like bonds yield less? Institutional capital, trillions of dollars, will start looking for higher returns. This is what we call the Great Rotation, money moving from safe assets into risk-on assets. And where are the highest returns with the most innovation? You guessed it, crypto. This macroeconomic shift creates a powerful tailwind for the entire market, supercharging any recovery. But while this recovery gains momentum, there are still some lingering fears that need to be addressed, particularly around volatility. How do you protect your gains and ensure you're not caught off guard by unexpected market swings, even during a violent recovery? Even during a violent recovery, volatility is a given. Markets don't move in straight lines. The key isn't to avoid volatility, it's to navigate it. This is where strategic thinking comes in. This is your recovery playbook cheat sheet, something you can implement right now. First, Don't chase pumps. It's easy to get caught up in FOMO. Instead, focus on accumulation zones. These are historically strong support levels where smart money is buying. For example, for XRP, look for retests of that $3.13 level after it breaks. For HBAR, identify those previous support zones around 25.5 cents. Second, understand your entry and exit points. Define your risk before you enter a trade. What's your stop loss? What's your profit target? Don't just wing it. Third, monitor market sentiment. The Fear and Greed Index is a powerful tool. When it's in extreme fear, that's often a prime accumulation opportunity. When it's in extreme greed, that's usually a time for caution. By following these simple principles, you can position yourself to ride the waves of this recovery without getting shipwrecked. But there's an even larger, almost unbelievable force building behind HBAR specifically. We've talked about BAR's potential, but let's be crystal clear, Hedera Hashgraph isn't just another altcoin. It's operating on an entirely different playing field. While most cryptos are battling for retail attention, Hedera is quietly securing massive enterprise and institutional partnerships. Think of it as the plumbing for the next generation of finance. Why is this crucial for a violent recovery? Because institutional money moves slower, but when it moves in billions, even trillions. And these institutions aren't investing in hype, they're investing in proven, scalable, and compliant technology. The fact that Hedera is built on a governing council of global giants like Google, IBM, Dell, and others, gives it a level of trust and legitimacy that almost no other crypto can claim. So if institutions are quietly laying the groundwork for massive adoption on Hedera, what does that mean for the price of HBAR when their projects finally go live and demand for the native token explodes? And how does this connect to the ultimate trigger for a market-wide recovery? Let's look at some tangible examples of Hedera's enterprise engines. Projects like Dovu are tokenizing carbon credits on Hedera, allowing corporations to buy and trade verifiable carbon offsets. This isn't just theoretical, it's a massive multi-billion-dollar market that demands a scalable, efficient DLT. Think about the thousands, even millions of transactions these systems will generate daily, each one requiring a tiny amount of HBAR as gas. Then there's the HBAR Foundation's massive ecosystem fund, actively incentivizing developers and enterprises to build on Hedera. They're not waiting for adoption, they're creating it. This constant influx of new projects, coupled with existing enterprise solutions, is building an undeniable fundamental demand for the HBAR token. This demand, once it meets the upcoming liquidity, will create a violent recovery for HBAR that will dwarf many other altcoins. But the most significant event is still on the horizon. We've discussed how the White House Digital Asset Report implicitly endorsed Hedera's architecture. This isn't a one-off. Global regulators, especially in the US and Europe, are actively working to bring clarity to the digital asset space. This regulatory tsunami will inevitably separate the wheat from the chaff. Compliant, enterprise-ready networks like Hedera will thrive, while the unregulated Wild West will shrink. This clarity directly paves the way for institutional products like ETFs. We've seen the power of Bitcoin ETFs. We're anticipating Ethereum ETFs. But the question is, when will we see an HBAR ETF? And given Hedera's unique legal structure, its compliance focus, and its deep enterprise ties, is an HBAR ETF not just possible, but highly probable in the coming cycles? Imagine the institutional capital that would flood into HBAR if an ETF goes live. This is the ultimate catalyst for a violent recovery. But there's a final crucial piece to this puzzle that will unleash the full force of this recovery. The ultimate trigger for this violent crypto recovery, and the exponential growth of XRP, HBAR, SUI, XLM, and other high-utility assets, is the network effect. It's when all these individual pieces, the S&P recovery, Bitcoin's breakout, altcoin dominance shifts, and the individual utility of these coins, converge and create a self-reinforcing loop. As more institutions build on Hedera, more developers are attracted, more users transact, and more capital flows in. This isn't just a linear increase, it's an exponential one. Every new integration, every new partnership, every successful enterprise use case, drives more demand for HBAR. The incredibly low fees and high transaction throughput of Hedera Hashgraph make it the ideal backbone for this exploding ecosystem. This is why Hedera HBAR is about to take over DeFi. It's not just about a single pump, It's about becoming the infrastructure layer for the entire digital economy. The White House has confirmed its architectural significance. Enterprises are already building. The market conditions are aligning. We are on the precipice of a surge that will forever change the landscape of crypto, making those current prices look like incredible discounts. HBAR, alongside XRP, XLM, and SUI, are not just recovering, they are leading the charge into a new era of digital finance. You've now seen the full picture. You understand the fundamental triggers that will drive this violent crypto recovery, and why XRP, HBAR, SUI, and XLM are positioned to lead the charge. This knowledge is your power. It's the difference between being a spectator and being a participant in the greatest wealth transfer of our generation. The market is poised for a significant move, and understanding these key indicators and the unique utility of projects like XRP, XLM, SUI, and especially HBAR, puts you miles ahead. Don't let fear or misinformation keep you on the sidelines. The signals are here. The opportunity is now. To continue your journey and dive even deeper into the specific strategies for capitalizing on the real-world asset, RWA revolution that's fueling much of this growth, and how Hedera is at its forefront, click on this video right here. This is your chance to transform your portfolio and secure your financial future. Don't miss it.